Thanks so much for your time. I am Pius Kojobaka, and looking at our stories. The World Bank is raising some serious concerns about Ghana's revenue mobilization efforts. Well, the bank argues that this poses a serious threat to expected economic recovery from next year. And this was captured in the latest economic update report on Ghana. More from George Yafe.
Ghana is expecting to collect more than 200 billion Ghana cedis in taxes by the end of this year. However, the World Bank doesn't think that this is enough. Looking at the size of Ghana's economy, also, when you look at the country's tax GDP ratio, it is still low compared to its peers in the African region. The World Bank therefore wants a lot more done in the area of tax collections and also taking a second look at tax exemptions granted to some businesses in the country. The bank again argues that Ghana needs to raise a lot more revenue, looking at the fact that there are no immediate plans of turning onto the international market to raise funds or even reopen the domestic bond market. The World Bank is ruling out tax hikes, but it believes that Ghana can do more in the area of enforcement and dealing with the loopholes when it comes to tax collections. The country's development partner is also worried about some fresh pressure being brought on Ghana's finances when they start meeting more debt obligations from next year. The World Bank went ahead to warn that the expected growth and economic recovery cannot be achieved if Ghana doesn't press ahead with debt restructuring program in containing exchange rate volatilities as well as threats to inflation slowing down in the coming months.
George, you have filed that report, and we want to have a conversation on the back of that. Joining us via Zoom is tax consultant Francis Timoboy. Thank you so much, sir, for agreeing to speak to us here on Business Life, and good to see you. Now, for you, how concerning is the World Bank's warning about Ghana's revenue mobilization drive, well, insisting that it poses a serious threat to the expected economic recovery from next year?
So, Pius, it is concerning because even though the country is recovering, you realize that the Minister of Finance was very clear in the media budget that it is quite fragile. So he wouldn't even celebrate the gains that we have made. So anything that threatens the revenue performance is really a risk because as we saw it. We see pressure from, organized labor making requests for better conditions of service. So if we are recovering and then we do not also get enough from revenue, then that's going to be a problem. The media budget, you remember that customs revenue was down by 1.6 billion Ghana cedis, and that is a serious, drawback to the revenue performance. So for me, I think the World Bank has nailed it. It is concerning unless we do something drastic to reverse the negative performance as we are witnessing in the tax revenue.
And pretty soon I'll ask you to tell me what that drastic thing has to be. But government earlier this year, I recall, embarked on rationalizing and, of course, streamlining the entire VAT structure. Is that not enough to boost our revenue mobilization drive?
Fortunately, the VAT reform has not taken place yet. The target is to implement it fully in 2026. So as we speak, the Ministry of Finance, GRA, and then the IMF are doing engagement with the various stakeholders. So the announcement was made, but nothing has taken place. And I think that because the target is to fully roll it out in 2026, so we expect to see some major announcements in the VAT reform come November when the minister presents the 2026 budgets. So for now, we can say we are not seeing any impact because nothing has been done. I mean, COVID-19 is still there. The VAT, street levy is still there. We have not implemented it yet because it will take place in 2026.
And considering the fact that, well, government has, given that intention to do that, for you, what do you think would be its impact? But I just want us to, conjecture this time round. But as you make progress with the discussion, well, there's been calls on various fronts for government to, take that bold initiative to address the challenges. What is that drastic thing you are looking forward to?
It all boils down to mobilizing enough revenue. You remember that this year, the GRA decided that let's go after the modified taxation, which for the past 10 years was not, implemented because of the challenges. So again, if you look at the insurance, the non-life insurance, GRA started implementing it. These are some of the measures. My concern was the fact that it came in very late, and therefore the impact to the revenue pool may not be expected. If you have a target to raise for full year and then you do it, July, you have lost first 6 months. So these are some of the measures. Aside that, the existing taxes, we expect that they should go fully in terms of compliance. Compliance is the key, and if this is done, even if we are unable to raise the 200 million Ghana cedis, at least the gap will be closed a little bit. Because of the performance of the cedi, you realize that the dollar exchange rate that is used in converting and calculating the custom duty has really hit governments at the port, because whilst we are benefiting from one side, the custom values are also going down. And aside that, the minister also outlined some leakages at the port. All of these things are going against the total revenue that we expect. So on the domestic front, something drastic needs to be done. And the GRA has started it, even though it didn't start very early. It could bridge the gap, but more needs to be done, especially in terms of education. As far as the modified taxation that was rolled out in July is concerned.
Talking about education and what have you, where do we start from? Because this discussion has been had on several occasions.
Yes, a lot more needs to be done, and we have seen the GRA doing something. But trust me, the modified taxation is targeted at the informal sector. These are people who traditionally will not be able to understand and know overnight. So we expect that more needs to be done by the GRA, and then after the education, enforcement needs to be done. The VAT reform would have brought us some, revenue, but unfortunately we have pushed it to 2026. All the same, we need to do more education to enable the informal sector buy-in. Remember, the informal sector, small businesses, according to the Statistical Service Department, they contribute close to 80% of the businesses we have in Ghana. So if we're able to target them and go after them, I believe that we can raise some money from there.
Francis Timoboy, thank you so much for joining us here on Business Live, for that great input you've had on the back of that story, which of course has to do with the World Bank's warning on Ghana's revenue mobilization. I truly appreciate the time. But I want to stay a while longer with the World Bank this time around, because their latest Ghana economic update has raised concerns over the financial stability of the Ghana Cocoa Board, warning that persistent operational and fiscal challenges could undermine one of the country's most vital export industries. According to the report, despite record-high global cocoa prices, Ghana's cocoa production remains weak, while Cocoa Board owes significant amounts to its suppliers. The World Bank noted that the agency's involvement in activities beyond its core mandate, known as quasi-fiscal operations, has further heightened financial risks. The report cautioned that these challenges, if left unresolved, could have wider implications for Ghana's economy, given cocoa's critical role as a major source of foreign exchange and rural incomes. The World Bank stressed the need for stronger oversight and accountability in both the agricultural and energy sectors to help reduce fiscal risks and ensure long-term stability. It also called for Cocoa Board to focus squarely on its primary business of sustaining cocoa production while streamlining its operations to improve efficiency and financial health. Cocoa remains Ghana's second-largest export earner after gold, contributing billions of dollars annually. With global prices at multi-decade highs, analysts say the country must urgently address production and financing bottlenecks to fully seize the opportunity presented by favorable market conditions. Economist Professor Patrick Esuming has described the World Bank's projected 5% growth for Ghana's economy as minimal, arguing that it fails to translate into meaningful job creation. Speaking to Joy Business, he noted that despite years of reported growth, many Ghanaians are yet to feel any real impact in their daily lives.
I think it's good to hear, but essentially, so I think it's the projection that seems like something new in terms of how the economy has been in the last 12 months, not exactly something new. But I think we have to put it in context. The average growth rate of 5% going forward has to be put in a proper context, because 2024, we grew 5.7. And based on the first quarter numbers, we are already projected to do something around the same number or higher. So actually, projecting 5% in the medium term is not something extremely new. And it's not something that we should be super excited about. I think that's what we need to. Even though it will be higher than our average in the last 5 years, I don't think that if you look at where we have been in 2024 and where we have started 2025, it's not like it's something super exciting. The other thing is that, the report focuses on jobs. And I think this is where we should be concerned with. If we are going to grow the same way, that kind of jobless growth we've seen in the last couple of decades, then, it's a higher number that's not necessarily bringing the benefit. I think the problem is that we focus too much on the macros and forget that at the end of the day, growth has to benefit human beings and we have to create jobs. And I think this is where we need to, perhaps it's not as exciting. I'm sorry to say that it's not as exciting as maybe.
In a decisive move to enhance development cooperation, the Ministry of Finance has conveyed a high-level strategic engagement with United Nations agencies, funds and programs operating here in Ghana. More in this report.
A statement released by the ministry said the day-long meeting reaffirmed Ghana's commitment to inclusive growth, coordinated planning, and sustainable transformation while providing a formal platform to align priorities and strengthen accountability between government and developing partners. It said a strategic engagement response to that challenge, reinforcing the ministry's recognition of the UN's pivotal role in supporting national development. The meeting brought together the ministry's representatives, heads of UN agencies, and its technical experts who shared strategic priorities, key interventions, and collaborative footprint across the country. Discussions focused on emerging coordinated challenges, streamlining multi-stakeholder collaboration, and aligning UN's collective support with Ghana's SDG implementation framework.
And to some other stories, the West African Institute for Financial and Economic Management, known as YFM, is warning that most financial institutions in the sub-Saharan African region risk facing operational challenges if effective financial report writing and presentation skills are not prioritized in their daily directives. More in this report.
The 5-day program brought together participants from across the region to build capacity in financial reporting and effective communication. Director General of YFM, Baba Musa, stressed that institutions risk serious operational challenges if they fail to strengthen reporting and presentation skills.
In many cases, technicians only write, reports that are sometimes too technical. And if they are not conveying the information to the man on the street, no matter how good the policy is, it might not be received well. So the idea is to train the participant on the best way to communicate technical information to the general public and to the understanding of the common man in the street. Clarity is is a key driver of report. If you don't write with clarity, then the message is not, delivered well.
His score was echoed by the Director of Research at the Bank of Ghana, Dr. Philip Abredu, to underscore the importance of clear reporting and accurate presentation in shaping sound policy and building investor confidence.
In today's fast-paced world, the speed of information flow is unprecedented. But the quality of that information and the clarity with which it is presented matters a lot to the audience. As you heard from the director, it's very critical for decision making.
The workshop is part of YFM's broader effort to strengthen financial management practices and boost economic stability within West Africa.
You're still watching Business Live. We have more for you after this break. Hello again, welcome back to Business Live. Local investors contributed just 20% of the $70 billion fund raised by Ghanaian startups in the first quarter of 2025. And that's according to a component manager, GIZ, Emmanuel Mumuni. In an interview with Joy Business at the 2025 Next Gen Opportunities Forum, Mr. Mumuni called for increased local participation in supporting budding startups, explaining that local investors are better placed to understand the diverse nature of the Ghanaian market.
First half of 2025, Ghanaian fintech CPay and sustainable mobility startup Kofa successfully raised $18 million and $8.1 million respectively, making them two of the companies with the highest capital raised in the country. According to reports on the venture capital market, Ghanaian startups raised less than $100 million, representing less than 8% of the $1.4 billion raised by startups in the African continent. Out of the total amount raised by Ghanaian companies, just 20% was contributed by local investors. Speaking at the 2025 Next Gen Opportunities Forum, a component manager at GIZ, Emmanuel Mumuni, believes that mobilizing capital from the informal sector will be a great step in addressing the situation.
In Ghana and Africa, we still have a lot of funding or investments that are going into more traditional areas as opposed to the more technology-driven ecosystem like what we have in the startup space. So if you look at the first quarter of 2025, it's estimated that over $70 million has gone into startups for the first quarter of this year. And out of that, over 80% of that is coming from foreign sources. And you know that in Ghana, there's a lot of money going around the informal sector as well. How can we make them see that investing in startups, though risky sometimes, could really bring up supernormal profits?
Mr. Mumuni was optimistic that the passage of the startup bill will be crucial in mobilizing patient capital for local startups.
As part of the Startup and Innovation Bill, there's a venture capital pool that would be established with public financing, a fraction of that, and private sources as well, to build this pool that would exclusively go into supporting startups in Ghana.
The Next Gen Opportunities Forum is an annual gathering of Africa's most promising young leaders, entrepreneurs, and change makers. It is designed to bridge the gap between ideas, its implementation, and available opportunities. Nabil Rufai is the media coordinator at Next Gen Opportunities Forum.
Next Gen Opportunities is a platform that has been created as a build-up of the TEDx Laboni and then TEDx Accra. Now, it's a platform that's been created to share ideas with people in different capacities. So when you look at the marketing, branding field, those who have been able to build successful businesses, just come and share their ideas with young people who are now trying to set up businesses of their own. So here, it's not just about talking. We are looking at also giving concrete advice or suggestions as to how young people can really evolve and build something sustainable for themselves.
Finally, before we go, government failed to meet its Treasury bills target for the second week running, and that's according to the auction results released by the Bank of Ghana. More in this report.
The government T-bills were undersubscribed by nearly 30%. The Treasury received a little over 3 billion Ghana cedis compared to a target of 4.24 billion Ghana cedis. The majority of the bids came from the 91-day bill. A little over 2 billion Ghana cedis, representing 68.4% of the bids, were tendered for the 3-month-day bill. The uptake was 2.02 billion Ghana cedis. For the 182-day bill, 678.18 million Ghana cedis of the bids were tendered. The bids accepted were estimated to the tune of 537.69 million Ghana cedis. Also, 272.58 million Ghana cedis were tendered for the 364-day bill. About 167 million Ghana cedis were accepted. Meanwhile, the yield on the 91-day bill went down by 7 basis points to 10.13%. VAT of the 182-day bill, however, went up to 12.23% from 11.54% the previous week. The yield on the 364-day bill nonetheless decreased by 2 basis points to 13.08%.
And that's our package by way of Business Life. Thank you so much for watching. I am Pius Kojo Baka. We have more for you when you log on to myjoyonline.com/business. Grateful serving you.